In this video, I'm going to show you how you can build a safe, secure, monthly dividend income for your future retirement. Good morning, Internet. How's it going? My name is Mike the CPA. Welcome to Money in Life TV, where we teach finances, investing, taxes, and more on a weekly basis. I get a lot of questions around what stocks to invest in that pay dividends monthly, but I often discourage people from investing in many of those companies because many of the companies that pay dividends monthly are not good companies. And what happens is investors who invest in those companies often lose the principal of their investment. So how do we get a good monthly dividend income without risking our initial investment? And that's what I'm going to show you in this video. I have a spreadsheet for you. It's completely free to download. I've spent a lot of time making this. And part of this is to thank you guys for helping the channel reach 30,000 subscribers. You guys are absolutely amazing. And what better way to thank you than to give you a free tool to help you with your dividends and planning your future retirement income. Let's get started. I'm going to start off showing you guys how the spreadsheet works just real quickly, and then we're going to walk through an example of how you can start building your monthly dividend income using this method. I hope you guys are having a beautiful day out there today. The spreadsheet you're now seeing on screen. So let me go over this with you guys, and I'll show you how this works and how you can build and customize your own monthly dividend income portfolio using good companies. The examples I've put on this spreadsheet for you guys, they're just examples, okay? So I'm not recommending you invest in these companies. Now, I own a few of these companies, but it's just, all of this is just for educational purposes. It's just an example, and I'm going to show you how you can build it for yourself and how to go about that process. So on the left-hand column, we have the investment name, the number of shares you own in that investment, the amount of the dividend that company pays every quarter or every month or whatever it may be, which we're going to cover more about in just a second. And column E, this is indicating how much of your total portfolio is invested in that one investment. Now, this is not programmed yet. This is not a formula yet, but I wanted to include it so you guys are thinking about this as you're building your portfolio. So we're going to cover this more in detail in just a bit. But for example, let's say that this person with these investments, let's say they had $100,000 in total invested, $100,000 total. But American Waterworks, their stock, their position in American Waterworks represented only 5% of that. So what that would mean is that they have $5,000 invested in American Waterworks out of the $100,000. And that's why it's 5%. You guys follow me? So it's just the total amount allocated to that particular investment compared to your total portfolio. And as we come to the right-hand side of the spreadsheet, you see it's laid out by month. This is the income per month based on these different investments. So as you can see, for American Waterworks, they pay dividends in February, May, August, and November, okay? So 4 times a year. And I think you guys are gonna see that most companies pay dividends quarterly or 4 times a year. Not always, but most do. And it just depends on what months they wanna pay those out will determine where it falls or where this income falls on your spreadsheet. If you double click on this, you're gonna see there's a formula, and it's the number of shares times the amount of dividends per payout period. In total, American Waterworks pays about $2 per year in dividends per share, $2 annually, but each quarter they pay out about 50 cents to make up the $2. Does that make sense? So each quarter they're paying about 50 cents. And I'm gonna show you how you find that information here in just a second. But these are linked so that as you get more shares, so like watch what happens. If I say now we have 100 shares of American Waterworks, just notice our income changes. So now I say 125 shares, you can see the monthly income keeps going up. 3,000 shares, and then obviously I need to expand the spreadsheet because now we're talking serious money. But that's essentially how this works. And then on the right-hand side is you see the total amount of dividends per year for each company. So the total payout per year based on our current holdings in this example, okay? And then down here on the spreadsheet, you're gonna see the total for the whole year. So this person would make about close to $3,500 in dividends for the year. And down here is the total per month. In total of all the investments combined, this is how much they would make per month. So in January, they'd make $144. In July, they'd make $194, June, $475, etc., etc. Over here, we see the total number of shares owned. Right here is the average dividend payment in this person's portfolio. based on all the dividends being averaged out combined. In this column right here where it says 100%, this is totaling the total percentage of portfolio, or so the amount allocated, the percent allocated to each investment in this person's portfolio. It should, when it's all said and done, in theory, it should be 100%, right? Now that I've walked through the spreadsheet with you guys, I'm going to show you how you can start building your monthly dividend income to the way you want it to be. I have a quick favor to ask you guys. If you want to support the channel and the work I do here, you can do so by dropping a like, leaving a comment below, and sharing this video with others. If you guys share this, I would so appreciate it. There's a lot of people out there who want to invest, especially in dividends, and this spreadsheet I really think is going to help them out. So thank you in advance, and I really appreciate all of you being here. You guys are like family to me. All right, guys, let's show you how you can build your dividend portfolio and normalize your monthly income with good companies. As you noticed, if you were paying attention, you noticed that the amounts per month were not even, right? They were not equal. And so how do we fix that, or how do we change that? And you might not be able to get it perfect, and that's okay. And I'll explain why in a little bit. But if you can get it pretty close, let's say within $100 or $200 per month, then that's pretty cool, because then you can really anticipate what your income's going to be every month in retirement. Now, the place we go to do that, to find monthly dividends, and I've left a link right here in the spreadsheet. You guys can click on it. It will take you right to it. And I'm going to show you how cool this is, guys. And how cool is it that we live in a world today where we have access to this kind of information? This is thestreet.com/dividends, and this is a dividend payout calendar. So if you've ever wondered how do you determine, or how do you want to build a monthly dividend portfolio, this is one of the ways I recommend doing it. If you guys have other resources that you use, that you recommend, please share those in the comments. I would greatly appreciate it. Let me just show you one example, okay? And I've already looked at this quite a bit, so we can cut out some of the BS and save some time. So this is laid out by month, okay? And they usually have it about 3 months at a time. So we have November 19, December 19, and January of 2020. Let's say that we want to find some additional income in November, okay? How do we do that? What kind of stocks pay dividends in November? I'm going to start off by clicking on the 15th, just as an example, because we want to, let's say a person wants to generate more monthly income in November in particular. So we go to this November calendar, and we see what companies are paying dividends in November. So I can just randomly click on the 15th, and this list is going to pop up. And these are all the companies that are paying dividends in November. So as I scroll through these, a lot of them I don't know. I don't know what they are. But there's one company that really stands out to me. And guess what? It's Phillips 66. And so I've added Phillips to our list in this example. And you can see here that they have an average annual yield of 3.25%. They pay out dividends in November, and their amount they pay out is 90 cents. 90 cents per share. So we can come on the spreadsheet, and I've already listed out Phillips right here. And if I go to the left, I'm going to scroll in, and bear with me, guys. Here's Phillips. It's investment number 10 on this example. And there it is. 90 cents per share is that payout amount on that date. Okay, so how do I verify that? How do I make sure that site is correct? Well, an easy way to do it, there's many ways to do it, but one easy way is to use Yahoo Finance. So I come to Yahoo Finance, okay, and then I'm going to type in PSX, which is a ticker symbol for Phillips. I'm going to click in right here, and this takes you to the summary page of Phillips. Now, notice in this example, the total annual dividend yield is $3.60 per share. But how many times do they pay out that dividend? 4 times. So 90 cents per quarter. So 90 times 4 equals $3.60. And that's how the math works on that. So I'm going to go to historical data real quick. I'm going to go to historical data, because I want to see that this thing actually does indeed pay out dividends in November. So I'm going to change this to dividends only, and I'm going to change the time period to the last 5 years. I'm going to hit done, and I'm going to hit apply. And there we go. So now we can see, indeed it does pay dividends in November. Last year it was paying only 80 cents. Now it's paying 90 cents per share. Because what you're going to find with these different investments is, if they're good companies, they're going to be able to increase their annual dividend payout every year, which obviously then means they're going to increase the quarterly payout amount. And I think the average in the industry, or for most companies, is about 5%. So some companies, 1 year you might, in this example, be making 80 cents, the next year 90 cents per quarter. It just depends. But just know or expect that your dividend income can go up if you're investing in good companies with good fundamental cash flows and things like that. You can see it pays in November. What else can we see? It pays dividends in February, it pays dividends in May, and dividends in August. On the spreadsheet, where did I list my dividend payouts for Phillips? Right here. Let me scroll out a little bit. So as you can see, I have them listed out right here. February, May, August, and November. And so that's how that works. Now, I have made a video on how I do a quick investment analysis on companies. I'm not going to go into how to analyze a company, but these are the initial steps of going to this website, thestreet.com. And like I said, how cool is it that we have access to this stuff, guys? This stuff did not exist years ago. Now we can find this stuff pretty easily and it saves us a ton of time, a ton. And we can start by just going to the month where we want to add in more dividend income and start clicking through the calendar and see what companies show up on this list. And then if there's companies that we're interested in, we can then go research what those companies are and decide if we want to invest in those or not and add those to our portfolio. All right, guys, there's a few other things I think you should have in mind when you're building a monthly dividend income portfolio with quality companies. Let's go back to the total percentage of portfolio column. Now, this is not currently a formula. In the next spreadsheet I build, because I'm going to keep building upon this spreadsheet and making this better and better, this will have a formula to it, but it doesn't have it yet. But the idea of building a safe, secure dividend income is not only do we want good quality companies, but we want to manage our capital risk, because how much of our total capital in each investment is in each company. So for me, now, in this example, like for American Water Works, I listed 5% right here, okay? But that number may be more or less for you. But I will tell you though, for me, I prefer to keep my risks per investment under 5%. So I don't like to have more than 2.5% or more, definitely not more than 5% in any one individual company stock to protect myself from risk. You never know when a company is going to come into some major legal issues or just start underperforming and things like that.
Now, Mike, what about an ETF? What if it owns a basket of stocks? Should I still only stick with 5%?
No, that's a good question, though. That's a good question. With ETFs, they're a little different. Now, remember, an ETF is an exchange-traded fund. Exchange-traded funds, they own either dozens or even hundreds of individual company stocks. There's a lot of built-in diversification, which is why I think ETFs are great. With an ETF, I think you have a little bit more leeway of how much capital you can allocate. Now, this is just an example. I'm not recommending you allocate this much, but anywhere from 10 to 20%, okay? It's whatever you're comfortable with. 10 to 20% max in an ETF. But for me personally, I'd probably stick between 10 to 15% in total in any one ETF. But that's just me. You do you, okay? If we're looking at our total dividend income down here, and we notice it's not normal, well, you might say, well, in March, I see that we make $462. In February, we make $205. In January, I make, $144, right, in this example. Well, how do we make it to where we're making closer to about $300 every month? Or how do we, our $400 every month? How do we do that? How do we bring up the amounts safely in the months that pay less versus the months that pay more? Let's say you wanted to increase your monthly dividend income in January. And so the first thing we want to do is, what investments do we already own that pay dividends in January? Well, we see Dollar General and we see JP Morgan. So let's just say I want to increase my monthly income for January, because we know JP Morgan pays in January. Should I just beef up my JP Morgan stock until it averages out? Should I just throw a bunch of money into this to average out my income? I don't recommend that, because if I'm already at my max position size in JP Morgan, I don't want to increase my risk in that one company stock. So what should I probably do? I would recommend going to find other quality companies, go back to the dividend spreadsheet, the dividend calendar spreadsheet, and find companies that routinely pay dividends in January and add those companies to the list. So that's how I would recommend adding or increasing your income into certain months. That's how I'd recommend doing that. Or if you don't want to do the individual company stock route, you can hopefully, I don't know exactly what ETFs pay dividends like in January, but maybe you can identify some ETFs in January where you can use those to beef up some of your January income, or in income in other months where it's either more or less of what you would want it to be. So that eventually, and I don't think you're going to get perfect. I really don't think you will, because it's going to be a really challenging mathematical computation, especially knowing that companies are going to continue to raise their dividends over time. But if you can get it within $100 or so every month of each other, I think you're pretty good. It doesn't need to be perfect, guys, but at least you'll normalize out your income using that technique. So you can use ETFs, or you can find other stocks that pay dividends in those certain months, okay? That's what I would recommend doing there. The other thing I think you should consider when managing risk and building a solid portfolio is not only the capital amount risk in each investment, but look at what industries you're in, what sectors you're in. So like example, like Coca-Cola, that's like a consumer staple, right? That's because it's a beverage. Bank of America is in the financial sector because they're in banking. Disney is in entertainment, and so on and so forth. So you can diversify your portfolio also by the amount in each sector. So that's the other way I would look to diversify that. And I would recommend using bonds, ETFs, or individual stocks. I don't recommend using mutual funds, and I just want to make that clear. When building a dividend portfolio, mutual funds, in my opinion, they have way too many fees and hidden fees, and it's just not worth it. Whereas with an exchange-traded fund or individual company stocks, I think you can make it worth your while. So those are some of the things to think about when you're building this income up and normalizing out your monthly dividend income. This is something, guys, I think is going to take you a lot of time to do. Take it slowly and do it the right way. Don't rush out and try to average everything out perfectly right now. Start off by placing all your dividend income investments on the spreadsheet, seeing what they pay on a quarterly basis, and seeing where your income falls for each month. That's where I would start. And then from there, and over the next several years, allocate or diversify appropriately so that you can then start to figure this stuff out and make it an average amount every month. Let's say around $300 a month or $400 a month or whatever it is you want it to be. I think you guys get the idea. The one thing I forgot to mention is I did say that monthly dividend paying stocks aren't always that great. The exception to those would be REITs. There's some great real estate investment trusts out there that pay dividends on a monthly basis, and one of them is the Realty Income Trust. And I think that one really highlights a strong company that pays dividends monthly, and they normally increase their dividends every year. Now, the cool part, though, also in averaging out your dividend income, guys, is remember, you can play with the spreadsheet. You can adjust how many shares you have here and see how that affects your overall monthly income just by playing with these different numbers in these different buckets. In future videos, guys, I'll be working on a more advanced spreadsheet to this, and in addition to this, like version 2, but even better. But this is a good start, so remember to check out the comment section and the description section of the video to download this spreadsheet for yourself. I really hope you find a lot of value in it. But I recommend finding companies that are strong branding companies that have been around for a long time. I think that's where you're going to get the most stability and best results in general for building a solid, long-lasting dividend income portfolio. That's the video today, guys. I just want to say thank you from the bottom of my heart for helping me grow the channel to over 30,000 subscribers. Oh my gosh, it is just mind-blowing. I could not do this without you guys. I'm so thankful for you. And I wanted to thank you by giving you a financial tool that you can implement in your own life. And hopefully you find this helpful. I hope you find a lot of value in this, and that's going to help you with your future investments. I will have more dividend spreadsheets to come to help you better manage your portfolio and risk and so on and so forth in the coming months. With that being said, if you liked today's video, please let me know by dropping a like. Leave a comment below, especially if there's comments or if you have suggestions of how I can improve this going forward. I would love to make those improvements on the spreadsheet in the next version of this. Last but not least, if you're new to Money and Life TV, welcome, welcome, welcome. And our goal and mission on this channel is to help you become fiscally fit. And we do that by teaching finances, investing, taxes, and more on a regular basis. You can subscribe to the channel by hitting that red subscribe button down below, and make sure you hit that little bell notification icon. If you tap that, it's gonna notify you every time I release new content on the channel, which is usually like once per week. With that being said, thank you so much again, guys, for spending time with me over YouTube. I will see you down in the comments section. Live life uncaged. Have a great week, and I'll see you in the next video. Peace.